Hello, welcome. My name's Frank. This is Premarket Wake Up. The community I am trying to build is called No More Paper Trading. It's not really going anywhere, but I don't care because I want it to grow as organic as possible. Get a good group of people going, people that want to become traders, and that's it. We don't sell anything. We don't sell memberships or signals, and we never will. All right, first I'd like to go over some of the news. Then I'll take a look at the equities and the overnight futures. And just take it from there. I'm starting to doubt a little bit that the AI bubble is going to be coming soon. I know I'm positioned for it, and I'm already hurting in those positions. None of my stops have been triggered, but it's just another example of how someone can become extremely convinced. And I kind of had a feeling, because of how much it was in the news and how everyone was talking about the AI bubble. And the large banks came out saying, prepare for a 10 to 20% drop. I was saying at the time it might be a liquidity grab. And you know what? It might have been. But there were so many other signals. I still think it's going to happen, but I'm not certain of the timing, and timing is everything. Well, let's take a look at the news events for today. It looks like nothing. Fed speech late tonight, if this timing is right. Oh, ADP employment figures. I don't understand FX Street anymore. They about a month ago they changed their entire calendar, and now it's worse. It really is worse. I gotta switch. They're showing the correct time. That's close to my time. And they're saying at 9:15 ADP comes out in the future. But right here it is. Here's the readings. I don't, something's messed up. That might be 9:15 Central Time, but these used to update to that. So I gotta find another calendar. Actually, I want to see if it is 8:15. TradingView doesn't even have it. Huh. Oh yeah, yes they do. Yeah, they have it listed as 8:15, so I mean that would really confuse me if you think about it. It would confuse anyone. Anyway, rant over. I just gotta find something better than FX Street from now on. I'd be really upset if I was paying for this. Alright, let's check the headlines. There was supposed to be other employment data coming out today. And even though I think the government's back in session, or whatever it is that those idiots do, they're doing it again. I think some of the data will be behind. We'll see though. Let's check headlines. I'll check all the, today I think I'm going to check all the major ones. Crypto trading for retail customers. Yeah, so does everybody else have that. I wonder if that caused a bump in Bitcoin. Came out 35 minutes ago? No, it did not. What else we got here? AI is turning peak season challenges into opportunities. Oh, okay. That's talking about freight. How AI can help freight. I don't think it will. Like everything else, they're trying to apply a broken tool to a problem that already has a solution. Why? Because it makes investor dollars come in. What else we have? CoreWeave released earnings last night, and while it was a very large beat over expectations, stock price still fell, which I'm happy about because I'm shorting them. Here's an interesting article. Let's check out this. Has the cash-strapped American worker fallen out of love with slop? Purveyors of the so-called slop bowl just had another messy quarter. I'm assuming this is Chipotle. What was once the lowly death salad has since expanded to a mishmash of options in a bowl ranging from proteins like carne asada and lamb meatballs to toppings like tzatziki or red chimichurri, and has become a staple of the American worker's diet. But the three big slop slingers, Cava, Chipotle, and Sweetgreen, all reported similar problems in the recent earnings. See, when I first saw this headline, I was thinking Netflix. Well, okay. I think we all know the average American consumer is very cash-strapped right now, especially with incoming increases in insurance. The people already can't afford health insurance, and now it's going to get worse. Okay, so the government isn't back up yet. And Trump's making a deal with India to bring tariffs down. Again, I don't really see the narrative today. Let's check out this article. This could... it's kind of funny. Right next to this article, they have... isn't that a strange pair? The bull case for stocks is broadening beyond AI, which is quite a positive tag. And then right next to it, stocks roaring rally loses steam as AI jitters revive. Again, another example of how you shouldn't really take much of this news seriously. You should look at what's being said. No. Look at the incentives. Always look at the incentives. So let's take a look at these articles and see what they're saying or why they would be saying it. AI fueled the stock market rally. Earnings are now giving it staying power. After a year dominated by artificial intelligence headlines, Wall Street's bull case is shifting towards something more fundamental to stocks. Earnings power that's beginning to broaden beyond big tech. Morgan Stanley, UBS, and other major firms are pointing to a clear through line this earnings season. Profits are strong, margins are stabilizing, and growth, while still centered in AI-heavy tech, is beginning to spread. There are clear signs that the earnings recovery is underway and pricing power is firming, Morgan Stanley equity strategist Mike Wilson wrote in a client note on Monday. His team's data shows the so-called Magnificent Seven are expected to post 23% net income growth for the third quarter, compared with 12% for the rest of the index. But we see incrementally positive developments for breadth to eventually improve, as revisions trend higher and revenue beats remain well above historical norms. Let's break this down. Is shown in so-called. Okay, so he's basically saying the big seven, the Google, Meta, Apple, I forget what else, Amazon, I forget who's now in the seven. Let's check it out. Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, Tesla. I don't know why Tesla's in there. I would consider that more of a meme stock. FactSet's latest data backs this up, with more than 90% of S&P companies reporting 82% have beaten earnings estimates, while overall profits rose 13.1% year over year. That marks the fourth straight quarter of double-digit growth. Well, it's a good thing I did not short the entire S&P. I only shorted AI-heavy stuff. Six of the index's 11 sectors are posting year-over-year earnings gains, led by technology, financials, and consumer discretionary. I think I invested in this as a hedge. So when I was looking for reasons not to short the big AI names, a lot of arguments were being made that it's not just growth in AI, that other companies are growing as well, pretty well. But I'm not shorting them. I'm actually invested in them. So at least I know my hedge is going to work out. Yeah, but I don't know. Consumer discretionary. How are they posting? See, that's where I bring in doubt. How are they posting such good numbers to really mixed results? I think Home Depot recently posted pretty good numbers. I don't know what's wrong with my internet. It's been very slow lately. Again, nobody wants this AI garbage. Get out of here. And I think the reason you see this, I have to do more research on it, but I think the reason you see great earnings not corresponding to a rise in prices is because everybody's looking at consumer demand, and that has been going down for a long time now, as well as unemployment has been going up. So those two mixed does not look good for the future. So the stock market is very heavily weighed on future earnings. Not so much earnings today, but future earnings. So if people think for a second, if investors think for a second that the future might be grim, you'll start seeing that earlier. That's just my thoughts on it. Maybe I'm convincing myself because I have some short positions. But we'll see. See if there's any other evidence in this article that they can point to. And that's the thing, even if they beat estimates, what if estimates are revised down? It's still not good for price right now. And when they bring up these articles, they never really give a time frame. Yeah, maybe in the long run we're okay, but I don't know. Still, let's look at the quick counter argument they give here. Still, some strategists warn that the trend will need to continue from here. Earnings sentiment staged a partial comeback. RBC Capital Markets strategist Lori Calvasia wrote in a note to clients, adding that while revisions have improved for 2 straight weeks, they remain well below summer highs. I believe revisions are outlook, right? I don't know. She added that earnings continued to provide a solid foundation for the U.S. equity market due to the resiliency of the C-suite. But said the latest recovery wasn't enough to challenge the notion that earnings sentiment peaked over the summer. The pullback in stocks last week, she wrote, was the thunder that can be heard from a storm gathering in the distance, a sign that investors remain uneasy even as profits hold up. That's what I just said, isn't it? More or less. The uneven backdrop points to what Evercore ISI strategist Julian Emanuel called a K-shaped stock market. I hear that a lot, K-shaped, but what does that mean? Is it a sideways K? Reflecting the outperformance of AI-linked and high-quality growth stocks relative to the broader S&P index. K-shaped stock market. I'm going to look that up quick. I've heard that a lot lately. Okay, so there's a lot of reference to it, but none of them are actually answering the question. The upward slanting stroke of the K. I still don't get it. I don't see any charts that ever are shaped like a K. The top of the K, I think it's a dumb. Okay, maybe think of it as like a V on top and a V on bottom. A K-shaped recession or two-stage recession is where parts of society experiences more of a V-shaped recession, while other parts, I gotta look at the whole article. V-shaped, U-shaped, W-shaped. What are these? Recession shapes. They don't give a picture though, because they know it's baloney. Well, it's hard to put a picture on. K-shaped recession or two-stage recession is where parts of society experiences more of a V-shaped recession, while other parts of society experiences slower, more protracted L-shaped recession. The shape of the K denoting the divergence into recovery paths. Okay, so some areas go up, some areas go down. Then I wouldn't really call that a recession, which that comes into kind of what I wanted to talk about today a little bit. But before we do that, let's see what else they say. Still, he noted, participation in the bull market has been solid. This is an important differentiator. I can't pronounce that. Between today and the dot-com bubble, and a key to further upside. I don't know. There's a lot of storms coming. Emmanuel sees that dynamic supporting his 7,750 S&P 500 price target by year-end 2026. Arguing that while the top 10 stocks make up roughly 40% of the index, their valuations are not stretched. Providing both a backstop and a path to further gains. To that point, UBS just raised their... So everyone's raising forecasts. So it might have been a liquidity grab. This whole short recession, it's not a short recession, it's not even close to recession. But this short pullback beginning at the start of November, it might have been a staged liquidity grab. I just have to always remember that yes, AI stocks are way overvalued for something that I don't think a lot of people want. But the stock market could keep running higher and higher and higher. It's just what it does. Catching the top is near impossible. But I gotta run my trades to fruition. And who knows, maybe tomorrow I'll change my mind again. The bank called current AI spending eye-watering. Yeah, but a lot of that spending is just companies throwing money back and forth between each other. And a lot of, in the dot-com era, a lot of the infrastructure that was being built was usable. It was just being built too quickly. Can you ask that same question today where, what the hell are a bunch of servers filled with graphics cards going to be used for when everything catches up? The promise is not there quite yet. Not a single company yet has turned profits on AI. The spending's there, but the profits aren't. I just don't think there's that many customers for it. Governments like it for tracking populations, but that's not spending on the level of the dot-com craze. We'll see though. I think eventually, but I really do see, I don't know. why I'm hedged. Let's see what the geniuses say. This isn't, okay, I suspect holiday retail sales is going to tell a different story. The unwritten credit crisis is being ignored. Even if inflation is tamed to tolerable, basic stable prices have outpaced wages for years. Healthcare insurance, that's what I was just saying earlier, and out-of-pocket costs will kill the paltry savings of most U.S. citizens. Then there's housing. No, this market is very dangerous. Can I do that? Yeah. Okay, I didn't know if I was signed in. The 7 major debt bubbles. Yeah, I don't know. I think that's why people are not reacting to earnings. It's just one article. But let's take a look at the stock market today. Dow, S&P 500, Nasdaq slip as AI angst clouds hopes for end to U.S. shutdown. I think they're overstating the positive aspect of the U.S. Of the U.S. government coming back. Some stocks will benefit from it, but the majority don't really care. U.S. stock futures leaned lower on Tuesday amid a revival in AI worries, slipping back from a rally fueled by optimism that Washington may soon end the record-breaking government shutdown. All right, they're just saying what's happening. Whoa. Testing that faith, SoftBank Group said Tuesday. Last Tuesday or right now? It sold its entire stake in chipmaker NVIDIA to fund its own investments in AI development. The move comes at a time that Wall Street is questioning whether the AI boom will deliver a payoff to justify lofty valuations for related stocks. Okay, so right now I call bullshit on this. They sold their stake because it's a great time to take profits. What I'm calling bullshit on is they're not going to fund their own investments in AI. Maybe some of it, but it's basically going to cash or repositioning. But they don't want to cause panic. That buckled with, I know he's a small fry compared to SoftBank, but Michael Burry, he shorted NVIDIA as well recently. Elsewhere in tech, CoreWeave trimmed its full-year revenue forecast after market close, taking the shine off its strong quarterly earnings. Shares dropped over 8% in pre-market trading after the NVIDIA-backed AI infrastructure provider flagged a delay by a data center partner. Okay. These concerns weighed on markets. So right here we have another article that says the exact opposite of what we just read. These concerns weighed on markets despite growing hopes that the 41-day U.S. shutdown could soon end. The push to reopen government took another step forward as the Senate on Monday evening passed a funding measure, advancing it to the House for a vote. A reopening would lead to the release of economic data delayed by the stoppage, giving markets better insight into the likely path of interest rates. Yeah, they keep saying, oh, the data is going to be back and then it'll be good. What if the data is crap? Not that you could ever trust the data anyway, but at least it was something. On the trade front, doubts about the lasting power of the U.S.-China tariff truce resurfaced around the crucial issue of rare earth supplies. The Wall Street Journal reported that Beijing plans to keep its exports of the minerals out of U.S. military hands, even as it speeds up flows to other American buyers. Yeah, but they're just going to funnel into military anyway. And what's happening with, we were supposed to build out our own mining capabilities. We have the minerals in this country. But we don't have slaves to mine it like they do in China. Can they make AI mine rare earth elements? There we go. That's the next company idea. Build robots that mine rare earths. The bull crisis indicator flashes red. You don't need to watch more than a few Chipotle hack videos to know something is off. I don't know what the heck that means. Who cares? Alright, that's enough for news. Let's take a look at overnight. If you might have gathered, not the best showing. S&P is down after rejecting yesterday was Monday. Monday's close. And is now stuck in a resistance area that was built. Okay, the big down day last Thursday. It was built at the top of that day. We'll see what happens there. Getting some bull signals from RSI as we head down. That could recover a bit. Again, this might be a mixture of, because we'll take a look at NASDAQ in a moment, but NASDAQ is weaker. It could be a mixture of, like the article said, good earnings for a lot of consumer discretionaries, bad earnings for some tech-heavy stocks, which, as you can see, the NASDAQ is crashing quite a bit more. Bear in mind the NASDAQ is always more volatile, but also rejecting yesterday's close. There's no resistance area here because we are already below last Thursday's high. Let's just take a look at where that is for reference. So we didn't even get close to that. So that alone kind of speaks to the weakness in tech right now. Oh, I forgot to look at ES going into today. So going into today for the ES, pay attention to, if we go higher, last month's close, definitely. Yesterday's high as well would stand in the way. As we head lower, which I think we will, we have yesterday's regular trading hours open, which is so close to yesterday's opening range low that I wouldn't trade off of either of these directly as like an exact scalp. And then below that we have yesterday's low. Sorry, that's regular trading hours low, which is right near pivot point. I'd pay more attention to that pivot point than anything else. The NASDAQ, if we head higher, look out for this huge resistance area, which was, yes, it was that Thursday. Like I was just saying, yes, okay. I'm getting mixed up now a little bit. But the NASDAQ is already at this pivot point, pretty close to it. So as we head lower, look out for that. And then beyond that, we have yesterday's low. But we might just brush right through there if we pass the pivot point. We might bounce off there and head higher. Today could just be a range day. Who knows? We'll have to see. The Russell, not quite as weak. I would compare the Russell to the ES. And again, that could be because of A lot of companies putting out decent earnings, non-AI companies. The fear and the worry is now in the AI companies, tech heavy. They've been investing billions of dollars, trillions, the last 2 years without any profit yet, at least during the dot-com bubble. Well, that was just a completely different situation. It's hard to compare, really. The Russell rejected yesterday's close, as well as yesterday's opening range low. Kind of stuck in this huge resistance area, which I'm trying to get a read on that. If you don't know, this is a great indicator on TradingView. It's called Volume Support Resistance Zones version 2. It automatically marks these areas based on volume. And they're very, very often correct. Oh, that goes way back, this area of resistance. That goes back to October 17th. It was the close, difference between the close and the low on October 17th. Lots of buying power in here. So we'll see what happens. And then we have yesterday's low if we head down there. The Dow, the industrials are not doing too bad. Completely different story. I did short right here at yesterday's high. But then we bounced right back up again. Could have shorted it again, but it didn't look good. So the thing I wanted to state about market crashes, total bear markets for the U.S. economy, which there's some arguments that say that we'll never get that anymore. There will always be a certain segment of, because U.S. markets are so diversified now. I mean, think back to the 20s and the 30s when everything was about industry, steel or rail. Now we have steel, rail, aluminum, everything to do with oil, which they had back then too. Everything to do with technology, internet, consumer spending, travel. Travel's a huge thing, much bigger part of the stock market than it was back then. So you might get, 3/4 of the economy crashing, but a quarter of it doing really well. Now, that is to say that that's a preamble to what I wanted to show, that while the ES, the NQ, and the Russell are all trending down, the Dow is not. I would say until the Dow falls, the others will not fall hard. And that's going back to something I learned from a technical analysis of stock trends. If you don't know, it's basically the Technical Analysis Bible by Edwards and McGee. And they stated pretty clearly in the beginning of the book that a bear and a bull market need to be confirmed in all indices. And that even correlates to the short term, which this would be the short term because we're in the overnight. So until you see this fall, I don't think the others will fall today. At least significant fall. We'll see. Gold. I did not take a look at gold at all today yet. So after a very strong day yesterday, I'm still kicking myself for, I exited a bull trade, a bull trade at, I forget what the level was, but I exited it early because I started to doubt my plan. But I would have made 5-6 times what I did if I had just held to the plan. My original take profit was right before, let me show you on the daily chart. It was right before this, the top of this shelf right here. It was right near here actually, where prices eventually got to. But I kind of panicked. Not panicked, I don't know what to say. Anyway, I'd say look out for today. This area right here, the overnight high, kind of corresponds with last month's R2 pivot point, as well as several different days, the top of their range. So that could be a significant area. Beyond that, there's not much, because if we look at the daily, you can see that price did not spend a lot of time in here last month. Kind of took a real quick journey up and a quick journey down. I still don't remember the reason for this. I think it was just profits, taking profits. And it's no coincidence that now that you see confidence in markets shaking a little bit, that gold is again rising. I don't know how much that theory can be sustained, which is why I'm not going long-term gold. Even short-term, it can be very volatile. We had how many days of a low range, and then just one giant day, straight up, which is what you get often in gold and oil. If we head lower, I mean, look out for yesterday's high, of course. That is quite important. Back to the 5-minute. Beyond that, be obvious. Pivot point, main pivot point at 40.79. Let's take a look at oil. Oil rising significantly around 3:30 in the morning. That's close to the close, Asia close, I think. I don't remember. I'm working on an indicator right now that will plot the exact lines of the different markets, opens and close. But there's limitations in Pine script that don't allow certain labeling. I kind of forget what the issue was with it now. It's been a long time since I worked on it. Priorities. But oil has this huge area right here to look out for. Last month's close, as well as several days high in their general range. As always, oil is a mess. It rarely hits exactly on key areas. I'm yet to master it in any sense. Let's take a look at Bitcoin real quick. I plan on adding more indicators to this, but just for now. Let's say, since this is 24/7, I don't even think there's any breaks like there are in futures. We'll consider 1800 the beginning of the overnight right here. So initially, some recovery, followed by prices going down in Bitcoin as well. Bitcoin has often been a harbinger of bad news for equities. Kind of has been leading them lately. Let's take a look at VIX and then I'm out of here. I'm already running way over. I reconfigured this as well as I made a new indicator. That's what I spent yesterday doing. The brighter color red is the VIX front contract. The lighter color is the forward contract. Are those terms correct? This is the most recent continuous contract. This is the future continuous contract. What is strange, what has me a little scared, is that despite the drops in price in the overnight for the S&P and the NASDAQ and the Russell, the VIX has not shown any rise, except for this little bit right here. Nor has there been any move towards backwardation, which I just learned yesterday. Backwardation simply means the gap between the front contract and the future contract. They're both futures, but you know what I mean. The most recent contract and the future contract. Once that gap shortens and the nearest term contract prices or not volatility is higher than the future term contract, that is a sign that volatility is growing. That is a sign that people are leaving positions or changing positions to short positions. And this indicator indicates that. The higher the line, the more in backwardation we are. Backwardation would be when things are backwards. Simple as that. Contango is, I think it's a music term. It's towards normalization, meaning the gap widens between the two, which is expected behavior. And all day yesterday, and even in the overnight, that gap has not gotten any better. Better for me because I want the market to go down. But if you want the market to go up, this is good. We'll see what happens today, but as you can see, back when the market fell pretty good, going back to the 6th when it started, you can see backwardation rising very quickly. Which is why I added this to my tools. But we'll see. We'll see how it goes. I'll be watching this to see if signs start showing in the VIX, because the VIX is usually a little bit ahead of price. Usually, I say. This is the VXX ETN, exchange traded, I don't know what it stands for. Not much sign there either. That's not all of overnight, but it starts at 4 a.m. I think, Eastern time. It's a little bit higher, but also not going anywhere. With strength falling in the RSI. I forgot to put RSI back on here. Also not looking good. What was the other one I had? Yeah, well. Alright, that's all I got for today. I think I will be here tomorrow. There's a chance I won't. I might have some work to do. Goodbye. Good luck. At least Thursday I should be here.